Apes and apettes, we meet again on this sunny, cold Saturday afternoon. We must talk about the margin calls that are sparking hedge funds and banks to provide extra liquidity into their margin accounts because the Russian bonds are going to zero. They are already at zero. They are being downgraded. And Russia was quoted in 2019 as being bulletproof because you could receive an over 4% yield on your investment in US dollar denominations, whereas 10-year treasury bonds only yielded about 1.8% at the time. So this is a widespread problem, and we are going to talk about that and what that does mean for our markets, as well as, most importantly, the hedge funds. I also want to talk about SWIFT because there was two countries, really three countries, that were opposed from cutting Russia off from SWIFT, and that was Germany, Italy, and Hungary. Now, they all three have said they support cutting Russia off from SWIFT. Germany is also sending 1,000 Javelin missile launchers to Ukraine. So you're seeing a lot of support for Ukraine, but most importantly, when it comes down to the financials, you're seeing Russia is likely to be kicked off of SWIFT by the time the markets open. So I want to talk about what that effect will have on the markets, as well as global trade around the world, hedge funds, and banks. And we have a lot of other things to cover, including the fact that China is slowing down JP Morgan's entry into the Chinese markets, where they have been plowing billions of dollars to essentially get into. So let's get into all of this information. I know I just hit you guys with a lot of information, so if you guys want to stay up to date with the most up-to-date information and news that is going to make you money, hit the like button and subscribe to the channel. As well as that, if you guys also want to come trade with us and start making money on your trades, significant amounts in some cases, check out the link down below in the pinned comment down below. The trades we have hit over the past 2 or 3 weeks would pay for that cost for 5, 10, 15 years in some cases. So thank you guys for doing that, and let's get into this video. So, where do we even start here? Well, I do want to start off with some of this junk ratings for the bonds. So S&P cuts Russia's rating to junk. Moody's issues junk warning. Why is this so important? Well, we've seen that UBS essentially cut Russia's bonds to zero. That did trigger margin calls, and you guys can see this right here. Swiss bank UBS cuts value of Russian bonds to zero, sparking margin calls. Now, when you see that S&P and Moody's rate these as junk bonds, you dramatically increase the amount of margin calls that are coming, especially once Moody's issues the junk bond ratings. Why is that? Because institutions, they're held to a certain standard where they cannot hold or invest in junk bonds. Even if you guys are unfamiliar, Ford and some of your other more notable companies, Macy's, Ford, oil companies back in 2020 were rated as junk bonds, so people could not hold them. Thus, it made the stocks go down. Thus, it created margin calls based off of that. So that is the significance here, and that is honestly a huge deal. And this has a wide-ranging effect. Even in 2008, during the real estate crisis, Moody's, S&P, both of these rating agencies were essentially rating CDOs, collateralized debt obligations, packaging mortgages together. They rated these packaged mortgages as good, and that caused a huge fallout. So once you see these downgrades, once they get downgraded to junk, that causes a lot of pain for hedge funds, institutions, and banks. But take a look at this. This article was posted November 18th, 2019. For Wall Street, Russia has become bulletproof. The US 10-year treasury bond yields just 1.8%. Those countries also have debt burdens that can spook long-term investors. Russia has virtually no debt. And the Russian 2027 dollar bond pays 4.25% interest. Germany doesn't pay at all, and interest yields are negative 0.35%. The US 10-year Treasury bond yields just 1.8%. Those countries also have debt burdens that can spook those long-term investors. Russia has practically no debt at all. And Russia, just for comparison, Russia only has about 18% debt to GDP, where a country like Japan has 236% debt to GDP. So Russia before this was a very prominent place to buy government debt. They didn't have a lot of risk of default. They had a very low debt to income ratio, essentially debt to GDP ratio. So a lot of firms and banks, hedge funds, institutions bought this government debt. And that is very important to know, because now once it gets downgraded to zero, you start to see margin calls on a massive extent. Also, take a look at this headline. JP Morgan reviewing impact on its indexes of U.S. sanctions, with total foreign ownership of Russian debt at about $64 billion and Russia's reserves in excess of $360 billion. Sanctions on sovereign debt are going to have a big impact to their business and emerging market bond indexes, a source familiar with the matter said. That's a big amount, $64 billion. To have that go to zero, and especially when, it's not a question, but when Moody's issues this junk bond warning, that's going to spark a whole new round of margin calls to come. And UBS, this is really a very interesting thing. So check this out. I'm going to read these two paragraphs right here because I think it'll provide you guys a lot of context to why this is such a big deal. So according to Bloomberg, which cited people familiar with the matter, UBS downgraded the lending value of certain Russian bonds to zero. And as a result, it requested that some of its clients increase securities or cash in their portfolio. Even though Russian sovereign bonds are still trading at around 50 cents on the dollar, the Swiss bank's latest move suggests that it will no longer accept the debt as collateral. For those investors that are unable to meet the added requirements, their securities risk being liquidated at market value, explained the people to Bloomberg. As of 2020, UBS held about $447 million worth of Russian banking products, such as guarantees and loans to Russia. So they even have a large exposure. I'm sure they liquidated, obviously, but before this had came out, because that's what banks do. They protect themselves first. But nevertheless, they definitely took a loss on this, and other people are going to take big losses on this as well. And I think this is going to have a bigger impact than people really believe. Mix this with everything else that we have been covering over the past couple of weeks, going on with the banking probes, going on with the whole, just a lot of different situations. Too many to really list off right now. And this is another domino that just fell, in my personal opinion. I mean, after all, Russia was said to be bulletproof when it comes to investing in Russian debt. So pretty interesting right there. Take it for what it is. I definitely wanted to bring it to you guys and to kind of remind you of the significance of this. Now it says U.S. block trading investigation hits Morgan Stanley's plans to expand in China. A U.S. investigation into block trading by Wall Street firms has ricocheted to China, potentially slowing Morgan Stanley's plans to expand its control of its brokerage and fund management business. China's securities regulator released a pair of statements Friday citing the U.S. investigations and problems that arose in an inspection of the bank's securities business. So everybody's getting screwed at this current moment. You're seeing a lot of money going down the toilet and literally evaporating. Now, the last thing that I do want to talk about is Swift. And this is arguably one of the most important things here in the very near term. Why is this? Because Swift think about this like wire transfers, right? Like I've said a couple times in videos, if you want to send $1 billion to somebody, in America and you're in Russia, you would no longer be able to do that. But on the other hand, most all trading is done through the SWIFT network. So Russian imports, exports, other countries' imports and exports to Russia are done using the SWIFT network. And that's seen as a safe and secure way to transfer money. Russia could probably figure something out for some partners, but by and large, they're not going to be able to do business with other people, and that is going to cripple Russia's economy. And that's something that nobody had really factored in to, hey, this is a possibility. And look, this comes from Ukraine President Zelensky. It says, I am grateful to everyone for the move to cut Russia off from SWIFT. And we know that Zelensky and Biden had a conversation at 10 a.m. this morning. We also do know that other countries have came out and said that they support this, like Italy, Germany, and Hungary, the three countries that were basically undecided of what they wanted to do in that realm. Because like it says right here, German Ministry of Foreign Affairs, we are working to determine how the collateral damage of a decoupling of SWIFT can be limited. It will affect these countries as well. And the biggest thing to note about this is this wrecks Russia's economy. This is going to hurt a lot of other economies. So it's definitely going to have an impact on the markets if this does go through on Monday, tomorrow, today, whenever it goes through, you're going to see that impacted in the markets, and you'll probably see a big move down. This is part of the reason that every time Biden has spoken about sanctions and he has excluded SWIFT, the markets have rallied. As far as sanctions are concerned, the markets, they only care about SWIFT because it has such a dramatic impact, and this is the most severe sanction you can put on a country. This sanction has only ever been applied to two other countries, Iran as well as North Korea, and look at where those countries are now, pretty much isolated from the world, and it really does hurt the monetary situations of those countries as well as other countries that do business with them. So very much interesting, and a lot of this, to me, looks solidified as you are even seeing like this. Germany's Chancellor Scholz, we will supply 1,000 anti-tank weapons and 500 Stinger missiles to our friends in the Ukraine. Ukraine presidential advisor, Russian attack on Kyiv is not advancing. Somebody wanted to call me out and said I butchered Kyiv because I was calling it Kyiv. Is it Kyiv? Is it Kyiv? Let me know down below. I'm not exactly sure how to pronounce that one. It's Kyiv to me, but whatever. Not a big deal here. And then it says, according to a presidential advisor in Ukraine, about 3,500 Russian servicemen were killed or injured. For context, that is half of the amount of American troops that were over half the amount of American troops that were killed in the 20-year terrorist war in Afghanistan, Syria, and Iraq. So they're taking heavy losses, and it looks like Ukraine is actually going to win this. When it comes down to it, they're very bloody. Russian troops, very inexperienced, and obviously very bad logistically. I mean, this is totally off topic from the video, so I do apologize. But Russia, they sent 7 attack helicopters to take a airport right outside Kyiv, about 20 miles away. Everybody was killed, and the Russian forces weren't even close. Why would you think that was a good idea? It doesn't make sense. There's a lot of leadership issues going on with Russia, and this is going to dominate the headlines for a while. It's going to dominate the markets, and that's why it is so important. Briefly, before we do wrap up this video, because I just threw a lot of information on you guys, make sure to go back and watch this video so you, again, if you need to, so you are up to date with the impact this is going to have. But the short interest, according to Ortex, is 20.35%. Current shares that are sold short of 104.24 million. Cost to borrow max of 2.32%, and we are still seeing the utilization at 100%. And just for those of you guys that have not heard my analogy on this, here it goes. When the utilization is at 100%, I like to compare this to the cost to borrow max, because if utilization is at 100%, that means nobody wants to lend out stock for the rate that they would get paid, 2.32%. So the higher the cost to borrow goes and the longer the utilization stays at 100%, the more bullish institutions are and the easier it is to gauge how bullish institutions are. Imagine if the cost to borrow went to 10 or 15% and the utilization stays at 100%. That means that institutions are not even willing to lend out their stock for 10 or 15%, which is an adequate, a good return nonetheless. And that does show a lot about the state of AMC. And like we've went over, there's a lot of bullish things. March 3rd is going to be a very interesting day because we don't have any transparency rules that are being implemented until the very earliest. April 20th and April 26th are the earliest those new proposed rule changes could actually become implemented. Right now, they are open for comment. So there's nothing crazy happening on March 3rd. If you guys have not watched the last video, go check it out. I go over all of this. So this is just a brief recap here. Nothing is happening on March 3rd significantly. But what is going to happen is a lot of people are going to buy the stock, so I do expect there to be somewhat of a rally, but I don't expect the stock price to go to hundreds of dollars per share because nothing is really happening on March 3rd. I cannot bring you any evidence of anything that is happening. So trust me, bro. Trust other people, bro. Doesn't matter to me. We are in there like swimwear. We don't care how long it takes because we know we're going to make massive tendies. And we just seen a couple more dominoes fall over the last couple of days. So very exciting. Thank you guys for watching. Enjoy the rest of your Saturday. Make sure to get yourself some free stock as well on this sunny, cold Saturday afternoon with Webull, Mumu, and Public down below in the description of this video. You literally cannot go wrong by doing that. It is by definition free money, and I know right now I want to have as many shares of AMC as possible heading into the next couple of weeks where we could see a big move in AMC's share price. You could get some free stocks, sell them, and buy AMC right on the platform. They do not use payment for order flow at all, and that is Mumu. And Public does not. Webull unfortunately does. As well as that, like I said, come join the trading community and start winning on your trades, and it literally pays for itself. The one Facebook trade, $60 into 3,000 would pay for that. I need to do the exact calculation, but I think it's like 10 or 15 years. So check that out. Thank you guys for watching, and I will see you in the next one.